What's going on, everybody? It's June 2nd, 7:45 a.m. Today, what we're going to do is we're going to analyze the markets, Bitcoin, altcoins, from a small time frame perspective, and then we're going to zoom out into the larger time frame perspective. Then we're going to look at surrounding data in crypto that's showing us the sentiment of the market, some of the more on-chain metrics and data and information, what that's showing us about the market. Then we're going to draw comparisons of the 2018 and 19 large retracement, large correction in the crypto markets, and put that analogy to today's market and see if that helps us. Because I'm personally recognizing a lot of similar signs of what's happening from 2018 and 19 to now. And I'm also seeing many signs that are not the same. Today's market is obviously very different. We all know that. But is it really that different to the point where we don't have to follow anything remotely similar to the previous markets? Not really. So we have to be able to learn from our history, learn from our mistakes, and be able to gauge where we are in the market and make the proper decisions. And that's what today's video is going to be about. So first things first, let's just discuss where we are in context of the market. And for that, we have to start off with the 4-hour time frame, because I think the 4-hour time frame gives us a pretty holistic picture of what we've accomplished so far over the last several weeks, which was a very nice uptrend, right? Back in January and February. After that, we had a very pronounced sideways movement, which obviously now we know was a large distribution mode. Okay. And then we proceeded to roll over to the downside, which confirms that distribution. Now, what happens after the distribution is critically important for the next several months. Is this the end of this entire bull cycle that we had? Are we going to have a further correction down, or is this a mid-cycle correction? From here, we need to start pressing on up, right? So let's discuss a couple things. First things first, if you want to understand where we are in context of the market, you have to go on to the 4-hour time frame and be able to recognize that we are currently in a consolidation funneling pattern right here. Okay, we call these symmetrical triangles, bear pennants, whatever you want to call them, right? But the point is, this is exactly what's happening. We are developing a price action tightening and a funneling in this area. And typically what happens is you will see in this funnel a decline in volume, as you can see right here. The decline in volume indicates that the buyers and sellers are coming to an agreement, but no one is able to win out yet. Now, here's another way you could look at it. I believe, let's just say statistically, that in a funnel like this, we have higher odds of breaking to the downside. Now, I'll tell you why. Okay. Now, downside doesn't mean we have to go to 20K or, I don't know, 15K or whatever. It could very well mean we just get a pullback maybe to 33, maybe to 30, and then push up. Okay. But statistically, the odds of a funnel sitting right at the bottom of the edge right here, bottom basically of this large support area that we previously bounced up from, right? This is a large consolidation pattern, which we propelled from towards 60K. We're basically sitting in that. Now you're probably saying, well, isn't that support? Yeah, but that's all it is right now. It's support that's waning. Because support, a strong support would imply buyers aggressively step up and they do not let price come back to these lows again, which would mean this consolidation pattern. See, if these buyers were really wanting to defend their position, or they saw this area as a very strong opportunity to buy, they would not allow so much time to pass for others to keep buying in here, right? It would be a quick drop into this area, right? Maybe even at the top of this range right here, and then boom, walk away from it. But the fact of the matter is, at present moment, we don't have that kind of market. What we have is a market that is very complacent and sitting in the middle and the heart of the previous support structure. So this is implied that this support is weak. There's no other way to look at it. Now, in that, we recognize that because it's weak, we are now developing a bear pennant ABCDE structure. Now, these ABCDE triangles are generally continuation patterns, okay? Continuation meaning the prevailing trend, which is up here, is down, heading into the triangle, okay? So heading into the triangle, right? The probability from here is a higher percentage to the downside. There's always a probability that there is a potential for upside movement, always, okay? You can't deny that. But how you go about that is very simple, okay? If you have this as A, B, C, D, and E coming up, right? Or I'm sorry, oops, A, B, C, D, E, if that's finished right there, all right, that means that for this triangle to be invalidated, price must get to the C, and then we can push off higher. And by the way, if we get to the C, I'm pretty sure we're at least getting to 42 and quite probably 45 and maybe as high as 51. Those are the next big resistance levels. But as long as we create this funnel right here and we have this wave as the top of the E, we can even have, you know, an E somewhere as a lower high alongside this trend line. As long as we have that, it is entirely possible that this consolidation can actually lead to another downside. Now, if we take that measured move of the downside, where does that take us? Now, again, this is just simple math. All you do, okay, is you grab the width of the triangle from here to here, from A to B, right? And you say, okay, well, if E is going to break down, I don't know, today, tomorrow, right there, from there, the measured move to the downside is about 24 to 25K, okay? That's the measured move. Now, there's another person who's much smarter than myself. He's actually the macro investor, global macro investor at Fidelity, right? And his name is Jurien Timmer. He actually outlined something very similar, but based on Elliott waves, okay? So I'm just gonna go through this real quick, right? It's kind of a long thread, but basically what he's talking about is he believes that BTC is in a very obvious 5-wave corrective count. Now I'm going to do that real quick for y'all, just so you can see. So what he's effectively saying is, let's turn all this stuff off. All right. And we're going to draw the 5-wave count. Okay. He's effectively saying that 1, 2, impulse of 3, 4, and we have a 5th to come. Now, within this thread, he does mention that it is entirely possible for this 5th wave to fail, meaning the Elliott wave count is complete till the 4th wave, but then the 5th wave is just not powerful enough to go, you know, deeper or go beyond the 3rd. Those are really the rules of Elliott wave is, you know, even if the 5th wave crosses the 3rd right here, the wave count is complete. But say we don't have that. Say we have, you know, the 5th wave as an interior in here. Okay, well, it's just an incomplete 5-wave count, but nonetheless, what he's saying is we might still have just one more leg down, which could be a higher low for this 3rd wave, and then from here we pop. Okay, but again, what he also refers to is once you start invalidating this structure, which is the key lower high in this whole area, this area right here around 41K is the marker that you want to break. Okay, once you break above that, then we can start talking about upside. Okay, you can go read this. This is on my Twitter feed. You can follow me right here, the Alpha Trades, right? So, you know, there's a lot of things that are mentioned here, and I'll let you guys do your own thing. But you know, here's kind of the thing that he's mentioning, right? This is exactly what he has outlined. Okay, he's wave 1, 2. This is the impulse of 3rd. 4th wave pulls back, as you can see right there, 40,867, which is kind of what I have right here, top of the C wave, right? Once you get above that, then you've definitely invalidated the count. But until then, we have to assume that we might have another pullback of a wave 5. And his target for a potential wave 5 is, let's see, I think he's measured it somewhere in here. Just want to make sure that I'm not putting words into his mouth. Yeah, if wave 5 is equal to the size of wave 1, it projects down to about 23,000 as a final low. If it's only 61.8% of wave 1, we may only slightly undercut the current low, which is around 30K. So we might get to about 29,000 and some change, right? The point is, these are all projections, right? Elliott waves don't really have to come out the way that we map them out to. They're just general ways of looking at the market. But the point is, there's a lot of people who are looking at this corrective count the same way I am, okay? Not necessarily that we all have to be right, but the point is, I've seen this so many times in my life where you could see that this is a very clear, A, B, C, in which case, if it is the completion of C right here, well, that means that then you have to get a nice pop-up out of here. If it's not, and this is, say, a larger degree correction right here, okay, then that means this has to be a 5-wave corrective count, or 5, wherever that 5 is, which is right here or right here, okay? And then from there, we then start a new wave set, okay? Which would be great for the larger trend of the overall bull market. Okay, so now let's look at the surrounding sentiment. Now, I did some of my own polling and analysis. I don't really have a lot of followers as other people do, but I just want to show you all that most of the people that follow me are pretty good, crypto followers and crypto aficionados. Okay, so the point is, I just asked a simple question a couple of days back. Do you think we're still bullish in this market in crypto? Right? About 48% of people said yes. Good thing is, maybe about 23% said they're not really sure. Okay. Point is, a much larger percentage of people are still bullish in the market. Let's look at someone else who did the similar survey with more people. This survey has 10,000 votes, right? What does this one say? Okay, are you still bearish, bullish, or unsure? 56% of people said they're bullish. That's pretty large, right? Unusually large, okay? Typically in a market that is corrected a lot, you'd figure that more people have had enough pain where they're like, shit, I'm kind of losing hope in this market, but they're not. In fact, they're clinging on to that hope. Okay, and I'll explain more about that hope in a second. So that's what we have in a 10,000 person survey. Now, what about Raul? He has 46,000 people. Okay, for the fun of it, let's take the BTC Twitter temperature. Right? He says, are we going to head up? Probably up or probably down. As you can see, probably up has 65%. 65%, that's pretty high. So what is the summary of Raul's poll, Elio's poll, and my poll? It's that majority of people right now are still bullish in the market. Now, this is where we start diving into some comparisons and analogies to 2018. Now, I know this period very well because it's the same period that I went through back here that related me to 2009, 2010, when I started trading in the stock market. Okay, it seemed very, very brutal around 2007-8 when I was relatively young, but people still had this faint sense of hope that we had to come back soon and we had to start pushing up higher. And then the market dragged a lot of people out for several years. And then the final flush, just like in 2018, I think the final flush happened in around 2009, 2010. And then we went up for the preceding years. And it's the same way in crypto, in Bitcoin, except an accelerated cycle here, right? So this period right here reminds me of the complacency that most people had in this area, in this bounce up right here, and then every single bounce going forward. I swear, this is exactly how it played out, because a lot of people still had this very, clinging hope that the market had to go up. I mean, crypto was so, you know, it was such a revolutionary technology, and institutions were coming in, and we're going to get an ETF passed, and this and that. It was literally the same thing that we're hearing now. I swear it was literally the same thing that we're hearing now. And you can make the argument that, well, Amal, we're in a different market. The Fed is printing money, the interest rates are low, institutions have entered. Okay, well, we still sold off 60 to 70%. If the institutions really believed in these projects, why would they just defend their positions, right? And if, let's just say they are still holding on to their positions, okay, well, what's their time horizon? Well, it's typically years out. So that means that the market could be in a multi-month correction, maybe a multi-year correction, right? Where prices do drag out for several months sideways, maybe even retrace further. And then once again, the institutions buy up those assets and then they drive it up, right? See, when institutions were here and we started talking about, oh, institutions are here, they're driving up the price. And now all of a sudden, you don't like the institutional playbook because you're like, wait a second, I thought institutions were here. And I thought from here, we just perpetually be in a bull market. That's not how it works. Because at some point they have to take profit. Because what happens is when their positions start becoming a larger part of their portfolio, or say they entered down here or up here, and they see a huge amount of profit, they're not like a lot of people on crypto Twitter. They don't just hope for 7,500K. They start realizing their profits, meaning they start selling their position. Whether it's chunks of it or the entire thing, we don't know. But the point is, more than likely, some or a lot of them took profits, and a lot of retail got to sell on the way down, right? And how do we know that? Well, there's a couple of data points on that, okay? I have this chart right here, which is the realized cap hodl waves. This is a 3-month and younger. And again, we're going to do a comparison of 2013, 2017, and 2021 top. I'm not going to look at 2011 because it's too young, but 2013, look, when new entrants come into the market, right? If you look at these right here, this is the legend right here, okay? Look at all the orange and red waves right here. They basically top off at the very, very highs of the market. Why? Because retail psychology is always the same. They FOMO in literally at the top, at the highest hype level and the euphoria level. And then what happens is when price pulls back, they keep selling and selling and selling on the way down. And this is exactly what happened in 2013, which indicates a peak in this orange cloud right here. Same with the red one, same with this, purplish one right here. Same thing happened in 2017. Top put in, everything starts coming down for several months. Again, 2021, top put in, everything comes down for several months. Now, here's where I have a caveat, if you will, about this whole cycle theory, right? Now, you guys know very well, Su Zhu often talks about the super cycle. Now, I'm not someone who completely buys into it, but I see his point. Super cycle, effectively what he's saying is, from here on up, we're never going to see, the 60, 70, 80, 90% pullbacks that we saw in 2017 and 18. Well, obviously he's already partially wrong, because over the last 2 weeks, we actually saw a lot of altcoins pull back 60, 70, 80%. Hell, Bitcoin even pulled back, right? From its high to its low, it pulled back 56%. And guess what? In mid cycles like this, Bitcoin has never done that. It hasn't done that in 2013. It hasn't done that in 2017. It's only done that now. Okay. Actually, I take that back, because I think in 2013, it did have a mid-cycle pullback. I'm gonna look that up real quick. I know for sure I'm wrong. I just want to see how wrong I am. I think it was this one right here. Yeah, 2013. So it had a very sharp 79% pullback, and then it went on to put on a new high. Okay, so this is, I think, if I'm not mistaken, this might have been impacted by the Mt. Gox event. I can't quite remember, but whatever it was, point is, I remember this faintly. I was following Bitcoin from afar. I was not invested in it, but I remember this faintly. And so it was a very sharp pullback right in the middle of the cycle. pulls back another for a double bottom, and then puts in a new all-time high. If we do just a basic fib retracement and extension analysis, let's just say from that high to this low in extension, we hit about a 5.0 extension on the way up. Okay, not to say we're going to do this the same this time around, but let's just say we did something similar, right? Say this is a mid-cycle pullback. Okay, well, I might expect maybe 1.618, 2.0 extension. So where does that take us? 86 to about 100K. I'm okay with that, right? So if this happens to be a mid-cycle correction, then that's what it could be. Okay, again, today's analysis is about looking at both the bullish side and the bearish side, right? So I pointed out to you the overwhelmingly, bullish pulls, right? And then we started looking at the Bitcoin LEO account from someone who's very smart, a lifelong technician. And now we're starting to look at the metric data, which is showing us that, well, okay, we've done this every single cycle, right? This one right here. So it is entirely possible that we do come down for the next several weeks, several months. That depends on how long the correction is supposed to last. Now, we were just talking about the Suzu supercycle theory, right? Well, I think he's partially wrong already because of the fact that we had such a severe pullback, but I don't think he's wrong in that we may not get such large sideways corrections until we hit a larger peak in price, which in my opinion, then I would subscribe to the fact that then this is a mid-cycle correction, but I don't believe that from here we have to turbo back up in the next few weeks. I believe that we can probably spend, I don't know, a few months just chopping around here and then go up. Okay. Now, ultimately, I do believe at some point we will go up higher, but I don't know if we do this, pull back, chop, and then regain strength and push up. That's what we're waiting on, right? And I'm not going to sit here and tell you, all right, guys, we're definitely doing this, because I don't know, and neither does anyone else. Okay. Let's look at some other things. Again, based on the 2017 cycle, what are the first signs of things happening in the market? Okay, this is the transaction spent output, the age bands of 1 year plus old coins. Guess what happened right near the tops of the cycle of 2017? Slowdown in spending, slowdown in spending, right? Again, this could just mean that we have a mid-cycle correction. We have still yet to have a capitulation event where we have, long-term holders starting to exit, where we might see something like this or these three, and then we can start making our way up over the next, couple weeks or couple months. All this stuff right here could just be compact in here over the next few weeks. Instead of this being sideways for 3 years, this could be sideways for, I don't know, less than a year, 6 months, 3 months, right? And I'm okay with that. Okay, that's again where I subscribe to the super cycle theory. All right, let's move on. So we can ignore this one. This one's really, at least to me, it's not that important. Now let's look at some other metrics that we typically look at as indicators to help us understand when the cycles are a little bit overbought or oversold. Well, one of the ones that I generally pay attention to is MVRV score. Okay, basically every single time in 2013, 14, and 18, or 2017 rather, we've seen the top being put into the market and then the bottom being put into the market right here based on this indicator. See, there's a price right there, literally the bottom. There's the indicator and the price right there, the top. Again, same thing, top right there in price, bottom right there in price right there. But this time around, again, is this a mid-cycle correction, or did we just get front run based on this indicator? And now we're going to roll over and hit the oversold levels down here. We don't know yet. But the point is, we did not do anything similar to previous cycles, right? So when people say that this time is different, which is one of the most dangerous phrases in financial history. Because the reason it's a dangerous phrase is because nothing under the sun in financial markets is different. The psychology of humans is the same. The cyclicality of markets is the same. The up and down movements of the markets are the same. The accumulation, distribution, impulsive wave, corrective waves, all that stuff is the same. So why should we look at this market any different? Is it because of bias? Is it because of hopium? Is it because we have our money trapped in a position where it might greatly benefit us for the market to go up? For a lot of people, that's the case. So if this time is different, and say we did hit such a euphoric peak, we basically went 20x in less than a year. Ethereum went 40x in less than a year. Altcoins went 50 or 100x in less than a year. Okay, well, yes, this time was different, but then what if the corrective wave is also just as sharp, quite deep, right? If you subscribe to the notion that this time is different, well, you have to accept both the upside and the downside. You have to accept that this indicator may have got front ran. Maybe we don't hit the peaks up here. Maybe we just have aggressive pullbacks, and then we have a mid-cycle correction, and then we go up. And where does that mid-cycle correction last to? Well, the most obvious level, okay, if we really, really have a deep retracement, is 20K from here down. And honestly, I don't even know if 20K is going to hold, because it's just a random anomaly. It's not really like a huge consolidation pattern, right? The biggest consolidation on the weekly is here, which we're literally sitting in. So if you don't bounce here, where's the largest weekly pattern below? It's way down here, around 10 to 12,000. That's insane to even think about, right? I'm not even crazy enough to say that we can pull back to that area, but point is, if you're just looking at this on a weekly basis, in terms of consolidations, where the next big pattern is, where price spent a lot of sideways movement, it's in here. Again, I'm not saying that we have to go down all the way, but from a technical supply demand standpoint, I mean, it is very critical for us to hold this. Again, like I said, maybe a sharp pullback and then quickly rebound back up. But I pray to God we do that, or else I don't know how much lower we can go, right? And again, the movement down this, statistically much lower chances. But are the chances there? Yeah, they're definitely there, okay? The other part of the bull market theory that we tend to ignore is historically the 21 EMA. Every single bull market in Bitcoin's history, going back to 2015, 16, this 17 area right here, look, this is the 21 EMA. We held this up very nicely, right? All the way up. And then guess what? Once we started to break down, we rejected it, broke down, rejected it, broke down, rejected it, broke down all the way. Okay. So by that theory, okay, fair enough. Well, maybe we need to go into the 21 EMA, which currently sits at about 44K. Maybe we need to dig into that and see if we reject it. Because if we reject it, then we might have, a similar pull down like this. Or if we climb up, hold above this, then the correction is done. This is now your area to long. And from here, we're going to aim for previous all-time high and new highs around 85K to 100K. Easily. If that happens, I would say fairly confidently that we're probably going to 85 to 100K. But that's not where we are. We're right here at the bottom, under the 21 EMA, right? What's the other metric that we generally pay attention to? It's the 200 weekly moving average, okay? Actually, let's put that on right here, all right? Let's do the 200 weekly moving average. Now let's go to weekly. Okay, historically, the 200 weekly moving average has always supported price back from 2015. Touch one, twice, three times, push off. Again, come back to it in 2018, push off. Again, come back to it last year in 2020, push off. Where does that moving average currently sit? It's around 13,000. Not to say that we have to just nuke straight down, but this trajectory is probably something like this. Like this. Okay. So by the time we meet price, let's just say at 20K, that'd be somewhere around September to October. If we're supposed to meet this 200 weekly moving average. If we're supposed to meet this previous all-time high. Okay. That's how I'm looking at it. And again, none of this has to play out the same way, but it's important for us to map out scenarios, right? Because the worst thing that you want to do is what people did in 2018-19, which was just hope and pray that their coins would go up. And they saw 80-90% pullbacks and they probably sold the bottom, right? And by the way, a lot of those coins didn't ever come back in the 2021 cycle. New coins came up, right? Some of the old coins came back, but you didn't really know if those coins are ever going to come up because 3 years is a long period to wait, right? And sometimes people really need that money. Remember, we're in a much more nuanced and tougher economy where you may need cash to be able to pay your bills. You may need money to get by, right? So do you really want to wait several months, another several years, just in case anything remotely similar happens in 2021, 2022 in this bear market like it did back here? I wouldn't, right? So this is why, at least in the advantage side, we want to be prepared for situations like this. And this is why I start to let y'all know that I'm starting to go into cash more and more. I made enough money on the way up, right? Now it's time to be patient. It's not that I'm saying that we have to be in a bear market. It's that I don't know. And if I don't know, and I see almost the same analogies as I see, from people, the sentiment, all the hopium coming up the same way from 2018 to 2021, it would almost be foolish for me to ignore those signs, right? We have to be able to learn from our history. Okay, I hope you guys do too. So we mapped out the bullish and bearish scenarios. We looked at the Twitter polls. We looked at some on-chain metrics data, right? I think overall, that's pretty much it. You guys got to get my view on the market. You got to see some higher time frame analysis. Even over here, the monthly looks really, really terrible in May. I'm hoping that June right here, this month, is at best a pause candle. At worst, maybe it comes to this low, but maybe it doesn't put in a lower low. I would be okay with that. Okay, if it just stops right here and just, in July, then we start pushing back up, that would be a really ideal scenario. But right now, this is not a good sign. We got a lot of time to go in the month of June. It's only June 2nd, right? 28 days to go. We got a while. So we'll see how that goes. All right. That's pretty much it, folks. That's all I got. I hope you guys enjoy this analysis. Again, not trying to spread fear, hopium, or whatever. Just trying to give y'all a good outlook on the market, what you may consider of the bull trend and the bear trend. Hopefully now you have more information to give you a more informed perspective, right? And by the way, just the recap too on altcoins. Well, guess what? Altcoins look very similar to what happened in 2018 and 19 as well. Okay, we put in a huge high, big cycle high in Ethereum, pulled back literally 50 to 60%. I mean, look at this high from this. Oops. Let's do this again. From this high of 4,400, we pulled back 60% in the span of less than 10 days. That's huge. That's massive. And then guess what? We're consolidating right here, right? Let me show you something else. Guess what we did? In 2000, 2017 top, or 2018 for Ethereum, we pulled back about 50% in the span of 5-6 days right here. Then what happened? We put in a sharp bounce, higher low, took out those highs with this, and then sold off more. This is almost similar to what I'm thinking and expecting here. If now here's, again, we want to go back to, let's just assume this time is different, because it could be, right? Not that I subscribe to that theory, but let's just say, I want to be more on the bullish side, and this is my hopium. Okay, not really even hopium, because I'm really just saying, if this happens, then I'm hoping that we have more, bullish odds. Okay, if this is the high right here, and this is a lower high, okay, what do we need to do? We need to get above this area, smash above and hold here. Then we can start talking about previous highs and new highs. If you reject this the same way, or you do something like this, I'm short from here, probably to down here, probably to lower lows. Because if we're doing something like this, similar to 2018, that means that this is just a stop run on short positions, because guess what? You have stops sitting above this area, stops sitting above this high right here for short positions. And if you just run those and then you roll back inside, well, that doesn't mean that there's going to be continuation. That means it was just a stop run. Price is going to come back and start collapsing further and further. And then I have to start preparing to start going more into cash and start shorting the market more. And guess what? Almost everything across the board looks like this. Okay, anything that you pick. Let me pull this out a little bit further. Let's look at Aave. See? Aave looks the same. What else? Let's look at some DeFi blue chips. Rune literally looks the same, right? It had almost a 60% pullback right here. Maybe it looks like a bear pennant. Maybe it looks like a reaccumulation consolidation pattern. We don't know yet is a point. It's too early. Link almost looks the same right here. YFI, pretty much the same right here. Sushi, definitely the same right here. Solana, right? Everything looks the same. This is where we get into a hyper correlated market where everything collapses one-to-one with BTC, because Bitcoin is so dominant in situations like this, because it runs the sentiment, it runs the money flows, it runs the correlations for the rest of the market. Very few things are able to escape without Bitcoin's permission, if you will, right? And so that's why you have a majority of the market very tightly correlated, very tightly structured with BTC right now. So whatever happens with BTC over the next coming weeks is probably going to be the same fate for altcoins, up or down. Okay. But the other caveat to that is it's entirely possible that altcoins also move sideways for a little while, and then BTC starts ticking up. That's my other theory, and I'll discuss that on the next video. Okay. Until then, I hope you guys enjoy this analysis. Take care. All right. I hope you understood my views on both sides of the market. All right. Cheers, everybody.